For a long time, I felt like I was missing a hidden piece of the market. But everything changed when I met a 10-year veteran trader completely by chance. His knowledge is entirely private, and no one knows him, but he decided to open the door for me. Naturally, I was skeptical, but when I saw his execution and tested the logic on my own charts, everything finally made sense. I realized the market isn't random, it actually runs on a strict time. That's why I decided to create this free course to pass these unique insights on to you. Most traders spend hours drawing dozens of support and resistance lines only to watch the price reverses in a place that seems completely random. But the truth is, they are missing the most important piece of the puzzle: time. Today, we are starting a completely free video course that gives you a massive edge. I am putting this all together in a single playlist, and I will be dropping new videos step by step. Welcome to True Open's concept. First of all, let's start from the beginning. What are these levels? These levels are simply the opening prices of a different time periods, like a session, a day, or a week. These are real-time anchors, and the market reacts to them every single day. First, they work as a very strong support and resistance level. Very often the price returns to this opening price and reverses, or the price breaks them, comes back to test them, and goes further to take liquidity. Second, they act like a magnet for the price. When the market is volatile and moves fast, the price allows gravity pull straight back to these levels. We will discuss all of this in detail throughout this course, but first let's look at the type of these levels and how they look on the chart. In this video I will show you 4 main levels that I use every day. There are many different types of opens, like session opens, weekly or daily. But today we will focus only on the 4 most important ones. And these levels are true day open, true weekly open, true monthly open, and the 6 p.m. level. Let's look at them one by one. Let's start with the definition. First, true day open is simply the opening price at exactly 0000 midnight New York time. How do we plot it on the chart? First, we find a candle that shows midnight New York time. Then we draw a horizontal line from its opening price. Next, we move forward a little bit and wait for the first good FVG to form on the 1 minute time frame. Once it forms, we extend this level until the end of the day. Why do we keep this level all day? Because it is extremely important for the entire session. If you look at the chart, you will notice that during the day, the market can bounce off this line, reverse from it, or break through it, and we can use it as a strong support and resistance levels. And when the price comes to this level, don't just click immediately buy or sell bottom. That is a big mistake. Instead, just observe the reaction. Soon I will explain about this more detail, so guys, have a little bit patience, okay? You need to look for clues. If you see a sharp rejection, a big candle weak, or a fast bounce right off the line of the FVG, it means that the level is holding. The market is showing you its hand, and that is your cue to look for a setup. I know you probably have a lot of confusion, and if I was watching this video, I would have so many questions like, okay, but how do I actually trade this? When do I look at these levels and so on, right? Let me give you a quick backstage secret. In this strategy, time is the most important factor for levels and for entering position. But don't worry about this right now. I will explain about these windows and how to use them later in this course. For now, let's just focus on learning these levels first. Next, we have true weekly open. Let's start with the definition. Most traders think that trading week starts on Sunday night when the markets open. Yes, on the chart you can see it. But for big institutions, the real weekly cycle begins at a different time. True week open is the opening price on the Monday at 6 p.m. New York time. Now, how do we find it and plot it on the chart? It's very simple. Open your chart on the 1 minute time frame, find the candle for Monday at 6 p.m. New York time, and draw a horizontal line from its opening price. And we move forward a little bit and wait for the first good FVG to form on the 1 minute time frame right after this open once it forms. We extend this zone for the end of the week. We keep our eyes on this level for the entire week because it's a major anchor for the weekly trend. Price can bounce directly off the true weekly open line, or it can go deeper into the first FVG and reverses from there. Sometimes price breaks cleanly through it, comes back for a retest, and keeps going to hunt for liquidity. It works beautiful as a high time frame support and resistance, and price constantly respects it throughout the week. Next, we have true monthly open. Here is a very important rule for this level. We don't just take the very first day of the month. Instead, when a new month starts, we completely skip the first Monday. We wait for the second Monday of the new month, and we find the 6 p.m. New York time candle. We draw our line from its opening price. Just like before, right after this open, we look for the first FVG that forms on the 1 minute time frame. We extend this zone and we use this level as our guide for the entire month. And the last level for today is the 6 p.m. level. Every day when the clock hits 6 p.m., a new day cycle starts for us. So every single day at this exact time, you draw a new line from that candle and wait for the first FVG on the 1 minute time frame. And you watch the new level for the next 24 hours. We only skip Monday because on Monday at 6 p.m. this level is exactly the same as our true weekly open. So we start doing this routine from Tuesday, then Wednesday, Thursday and Friday. Every day at 6 p.m. a brand new line. It is the exact same thing with true day open. Every single day we get a new timing, a new session, a new opening price. Both true day open and the 6 p.m. level are daily levels. They only work for the specific day. Once the day is over, those lines are done, and we refresh them for the next day. On the other hand, true weekly open is different. We only mark the true weekly open once a week, on Monday at 6 p.m. And we keep that exact same line for the entire week. So remember, true day open and 6 p.m. change every single day. True weekly open stays the same all week. Now that you know all of these 4 levels, let's jump into TradingView and backtest it. I have some great news for you. To save you from doing this manual work every single day, I built 2 indicators. The first one is completely free. It plots the true day open, true weekly open, and the first fair volume gap automatically. The second one is the Pro version. This one has the entire strategy programmed inside, with all of the advanced features and levels. If you're just starting out, you can absolutely use the free indicator to test this level first. But if you want to take it seriously and trade with the full setup, you can check out the Pro version in the description. Let me give you a quick guide on how to use this free indicator, and then I will show you some chart examples using the Pro version. The main difference between these 2 indicators is simple. The free version shows only 2 opening levels, while the Pro version has all of them. Plus, later in this course, I will show you many other cool features that are built into the Pro tool and how to trade it properly. So let me show you how to add a free indicator, or you can get a link in the description. Let's add the free indicator to our chart. All you need to do is open the Indicators tab on TradingView and type TDO, TVO, Milano. It means true day open, true weekly open, just like more shorter. You will see it right there. Just click on it. As you can see, it automatically shows you these 2 opening levels and the very first FVG after them. First time you can absolutely use this free version to get started. But if you want full access to the completely automation, you can get TrueOpens Pro. For the rest of this video, I will showing examples using the Pro version, simply because it draws all the levels for us automatically. and save us from the sketching everything by hands. First, let's set up this indicator so we can actually start trading. This tool has a lot of cool features, and I will explain exactly how they work in others videos. But right now, let's just configure the basics so your chart looks clean and ready for setups. By default, the most important levels are already turned on for you. But right now, I'm going to turn off the cycles. They are amazing for helping us find the right timing to open positions. Now, before we move into real chart examples, please don't let the amount of information scare you, really. You don't need to overcomplicate this. Let me give you two powerful tips to make it easy. First, only focus on these levels during active session, for example, London or New York. Choose only one session and look at these levels only in the session. For example, if you trade the London session or the New York session, just watch how the price reacts around these areas during those specific hours. Second, here is a golden rule for opening your positions. Only look for entries inside the macro windows. This means 15 minutes before the start of new hour and 50 minutes after. This is 30 minutes window has significantly higher volatility. Keep these two things in your mind. Focus only on one session, London or New York, and pay attention at macro window. Okay, let's break down the first example. This is a Nasdaq on the 1-minute chart. First of all, notice that this is the London session. Remember I told you to focus strictly on macro windows and watch how price reacts to our levels during those times. Let's look at the very first macro window of the London session, which is formed in 1:45 to 2:15 am. As you can see, price broke through this level, retested it, and then moved directly to another level, specifically the tropically open first FVG. Now we are in the second macro window. Let's watch at the second macro window. Notice how well this level held the price. If we get a clean reaction here before the macro windows ends, we can look for a short position. For me, a great entry is when we get a market structure shift inside the macro window after touching this level, or we can notice SMT divergence. If we check correlated assets, since NQ correlates good with the S&P and Dow Jones, we can see that Dow Jones is slipping the high, but NQ is not. This is an amazing sign that gives us a clear edge to go short. As you can see, during the macro window, the structure shifted down, which was our perfect signal to open a short position. Our target here can be the closest key level or a nearest liquidity, like a session liquidity pool or a previous daily, weekly, or monthly high and low. We will talk more about these targets later. So in this example, we can put target to the open FVG. Okay, let's break down the next example. This is also the London session. Let's look at very first macro window of the session and see what happened. Notice that when London just starts, we didn't have any good entry points at all. So we do nothing and just wait next macro window. Next macro window is 2:45 to 3:15 am. Let's look at this macro window. Here is an interesting situation. Price breaks through the open FVG level and did a retest. In general, you could open a position here, but the risk-reward ratio wasn't that great. Personally, I would wait for another macro window because it's always better to wait for a cleaner test. But if we look at the third macro window, we finally get a beautiful entry point right from our level. Look at this. Price touches the level, and the first thing it did is form an inverted fair volume gap. Then it does a small pullback, and then was formed a clean market structure shift. Our target here can be the closest liquidity or a key level. How do I actually find my targets? Usually I switch over to the 15-minute time frame and mark just two things. the nearest liquidity, like a swing high or swing low, or a 50-minute FVG. It's completely logical because the market always wants to balance itself, so it's highly likely to go and fill those FVGs. But for now, we'll just look at how the price reacts to this level inside the right timing. So let's pay attention at this example. Let's look at first macro window of the London session. Price touches this level and did a retest, but it doesn't really look like a clean reversal reaction because it more looks like a pullback. A few minutes later, price breaks above the level, retests it from the top, and gives a small reaction upward. As you can see, the market didn't go very far up. If we watch more deeper and out to the 50-minute time frame, the overall context is clearly bearish. This upward move was just a temporary market balancing. Now look at the next macro window. Price breaks right back below the level, comes up for a clean retest, and give us a beautiful reversal to downside. And let's break down our very last example, which focuses on the 6 p.m. level. Let's look at the first macro window of the London session. As you can see, price broke through the open first FVG level, come back for a clean retest, and you could have easily taken a position right after that retest once the structure shifted. Look at how price then moved directly toward our next target, the 6 p.m. first FVG level. Next, let's pay attention to the second macro window. Notice that even before the macro window officially started, the level had already been tested. Then inside the macro window itself, we got an amazing confirmation to enter. First, an inverted fair volume gap was formed, followed by a clean market structure shift. And as you can see, price moved toward this liquidity. There is nothing complicated here. Let's do a quick recap of exactly what you need to do. You mark the 4 key levels, through the open, through weekly open, through weekly open, and 6 p.m. level. Then you simply wait for the very first 1 minute FVG to form right after this opens. You can easily do it all this by your hands, or if you want to do it full automation, you can get this pro version. The best part about this strategy, it requires 0 subscriptions, really. You don't need to pay any trading queue plans, you don't need volume analysis tools, and you don't have to pay for any extra data feeds. All you need to do is open a clean chart, mark these levels, and know the right approach to time. We are going to break all of this information throughout this course and in upcoming videos. So let's say one more time. Mark this level, wait for the first FVG, pick just one active session, and watch how the price actions strictly inside the macro windows. I'm not forcing you to buy anything, and you don't need any kind of magic indicators. You can see your first results without any subscription and even the pro version indicator. It's just that if you don't want to spend your time on manual analysis, you can try out pro version. So, and the choice is completely yours, but again, you don't need any subscriptions, you don't need any indicators to see your first results, really. Give yourself 1 month of consistent practice, learn from your mistakes, and really, you will see your first results. So, thank you for your time, keep it simple, practice, and I will see you in the next video.